So today we are talking about the trends. We have finished the conceptual framework there, addressing a few commonly asked questions. So today we shall continue with the trends, which involve ADX, MACD, RSI, and Stochastic. So from previous, the question to buy or not to buy, the fundamental analysis will assist us which stock to buy. And the technical analysis would let us know when to enter or what price to buy. They are also investor or trader. They use technical analysis first. Using the screener, they screen those MACD or margin, everything is what they want. Then they're able to get the few choice of stock. They do that also. But in beginning for us to learn, it's best for us to use fundamental to find which stock first. Then only we go for technical analysis. So once the stock was found to be okay in terms of fundamental, then we use technical analysis to look into the probability of success based on the trend, margin, and strength. So today we are talking about the trends. Anyhow, I realized that we still need to touch a little bit of candlestick. We don't go into the detail about the pattern, the signal, but at least some basic understanding is needed because we find that it's needed for us to interpret all this MACD, RSI, stochastic. Okay, so now we move on. You may see that in any chart, if you go and click the technical analysis of a stock, whether in this trading view or the KLSE screener, you see this type of a symbol come out in the price, for the price up and down. So basically, you see the green one, there's actually the body. Let me see, you can see the laser pointer. There's the body there, then there's a shadow up and down. Well, there's also a red color. Basically, what it means is that the price start at market open at 10 ringgit. Then after that, they go to on top 10.75. Then it may go down or up in the middle, and they go to lowest 9.25. And at the end of 5 o'clock or 5:30, they close at 10.50. So you get this type of candlestick form. Okay. Green only in KLSE or in other country, but in other country might be different color. So don't get confused. Like in Hong Kong, they tend to use the green one to be price low one. Well, the price increase one, price market close at the higher price one, they use the transparent one. So they have to make sure you take it right. Okay. So for the red color one, market open at 10.50. Then they go up to 10.75. It may go down to 9.50. At about 5 p.m., market close at 10. 10 is low and 10.50. So you get the red color candlestick. It shows that the market close at the lower share price than market open. Actually, that's typo. Okay. All right. So sometimes you see this pattern, no shadow one. On top, no shadow one. This one we actually call hammer. No shadow one. Right. This is because the stock opened at 10 ringgit, highest 10.50. It may go down to 9.25, lowest of the day. Then it closed it at the highest mentioned just now, 10.50. So in this case, it's still green because market closed at a higher share price and open. But there's no upper shadow, no shadow here because the highest is equal to the close price. Now there's a lot of meaning here. One is it may signal that the price have a higher probability to go up rather than go down when you open the next morning, most likely will go up because you haven't full go up, the heat chop off already, 5 p.m. already. So you know that there's a probability that tomorrow morning, 9:30 open, it will be going up. But after that, we don't know how we go down. But sure, open up, it should go up first. Sometimes you see the cross like this, there's no body, there's shadow here and there, but there's no body. This one probably market open like 10.50, then 10.75 or highest. They go down to low as 9.50. Then the market close is the same value of it open. So we call this doji. It's a Japanese language. It's called doji. There's no body. Doji basically means that like all the hoo-ha, but the price stay the same at the end of the day. So there are a lot of uncertainty. There's the bear and the bull was pulling each other. They are maybe about half of the investors find that they should buy, the other half they think they should sell. So they end up something like that. Okay, so this is a basic understanding. So now we can move on to the trends. The first technical analysis tool we're going to mention today. Now there are a few trend indicators to tell us that whether the stock is going a trend or no trend. So one of them is what I want to discuss today is average directional index ADX. We used to use the word ADX to simplify. Now we have to know that this index only signifies the strength of the strength. It doesn't signify whether it's a bull market or bear market or kangaroo market. It's just there's a trend. It might be trending down or trending up, but basically there's a trend. There's a trend. I mean, there's activities, sell buy activity towards one direction. Either more selling pressure or more buying pressure. Then there's another one is DMI, but we don't discuss here, and also RO indicator. The purpose of this ADX basically is to let us know which trend indicator to use to be more accurate, either MACD or oscillator. Oscillator basically is RSI or stochastic. General rule of thumb is that when there's a trend period, then we use MACD. When the stock is no trend, they go sideways, they no up and down, and I think basically no trend, then we use the oscillator. So we use ADX 20 to 40 as a guide. Somewhere between 20 to 40, MACD work the best. And below 20s, then we use oscillator, either RSI or stochastic. To another level, this is through my experience. Sometimes you get the ADX 18 to 22 is always around floating 20. So you cannot decide whether it's to be above 20 and below 20. Then it's fine for us to put both. You can see both still can use, you can signify something for you. Most time they can show the same direction, whether the price is going up or going down. Through my experience, I find that when the stock is high volatile or hot stock like glove stock or tech stock, and they can have ADX more than 40 or 50. I find that use this MACD, RSI, and even Bollinger Bands is not accurate. It tends to give us quite a delay signal. When the MACD asks you to buy, that means the stock already go up to the middle already. When you buy, it's about time for it to go down. So a bit delayed. So most of the investors I know, they got caught using the MACD to track all this glove stock. Glove stock is very fast. So most of them, they are using all Bollinger Band, they use the MACD, SIs are all giving them the wrong signal. So after about a month, I try and I found actually Fibonacci and EMA is still the best to track this type of high volatile stock. Okay. So I can show you how we can do it. Here is a slide you forgot how to trade this ADX. Okay, now I stop to the new share. Okay, I go to this. So this is the trading view. You go to trading view, first thing, we go to find the company. So I put that super Scomnet. Just one of the stack stock, Super Connect Technology. When you look at it, make sure you click the right one. Sometimes it's the warrant, sometimes it's the like Supermax or Top Club. They also listed in United States or Singapore, different. So make sure it's Malaysia. So you click it, then you will have a company come up. Actually, you will find that if you scroll down, you come here, they actually give you all the technical analysis, but it's a lot, and sometimes it becomes not practical. If you go down there and click this more technical here, then I put the laser, right? Then you have actually more detail. You can change the day, everything, but it's too many, so we don't use that one. Okay. After searching the company, we go to the full feature chart. Now we're going to do the ADX. We will put this FX here. Click here. The thing come out. Search. We put ADX. You find ADX, the first one got the lock here. That means this one is for pay member. So we go for ADX and DI. DI is DMI. Okay. So we click ID, we close this window, then we see this thing come out. Basically, you don't know what I mean. We go to this setting. We don't want to see DI. We just want to see ADX and the level 20. You already set for us the 20 as a benchmark. So you can see here, now this Comanex is actually always 40 and 30. It's very high volatile. So using MACD may not be a good choice. But in this case, we just assume we're going to do MACD first. You can see it's quite high volatile here. Okay. Right now we go down to go back to our sharing. Okay. So here actually some of step you can use a KLSE screener also. KLSE screener give you actually a faster, more updated about maybe 1 or 2 minutes. But I find that trading you give you more tools later. When the more you use it, then you realize. So when I do analysis, I use the trading view. But when about to buy, when I want to check the volume and the candlestick, I will go KL screener to check on that, confirm. Okay, I mentioned just now, you're using this trading view. Some of the technical analysis have been summarized for you. Like you can just go there in detail. You can just change the time. You see, they even track about 1 minute, 5 minutes, 15 minutes. So sometimes you put 1 day, ask you to buy. You put 4 hours, ask you to sell. So a lot of these things. And as you know that we have two problem of buyers in using technical tools, analysis tool. One is data mining, one is subjective interpretation. So now the best is to use what most people are using, like this old man mentioned, remember me, using the self-fulfilling prophecy concept. That would be the best way. Okay, now we move on to MACD. After we know that the ADX, we know that we should actually use MACD or oscillator. Okay, now we go for MACD first. Now MACD, basically there are a few things. Mostly the default is 12, 26 and 9. 12 days period or 12 periods, 26 days, 9 days. Normally we don't want to change the setting because remember we try to use what the most people use. The most people, they don't change the setting for MACD. So MACD, first thing we need to know is the default. Second is there are two lines. There are two lines. There are always two lines and there's a histogram. Basically histogram is the difference of the two line figure. So you get the histogram. Okay. So we need to observe the faster line cross the slower line. The faster line is always MACD, the blue one. Sometimes the setting will change color, but they don't ask to tell you how to observe. We want to observe the faster line. The faster one normally go up on top. When it go down, at the go down one, that's the faster line. We want to see the faster line cross over the slower line. That's why we want to notice. Then the other one is their histogram. Okay. Now, sometimes we don't depend on color. See how we can spot the MACD, the faster line over the signal line. Okay, the MACD line is always moves faster than the signal line, whether uptrend or downtrend. I mean, when we go up, it's on top. When we go down, it go down first. So this dotted one is the faster line. So when you see this line crossing the slower line. So the first one, this crossing, we call it MA crossing now, moving averaging crossing. Okay. So we want to see the fast line cross to the slow line. The mean is the trend is going to upward. This is the price. This candlestick going up. Okay. When the fast line cross all the slow line, the mean it signifies that the price is coming down. So we based on these two, the fast line to cross line to these two, for us to have a gauge to know that what are the probability of the price going up or going down. So we buy when cross up like that, we sell when it calls out on the top. Okay. The other one is I mentioned the histogram. Histogram is here. You can see that the histogram, we call it convergent. The word convergent basically means that the histogram is moving towards the direction on zero, the central line. It's called convergent. Divergent, it means they're far away. Here is convergent. So you want to observe the histogram is become smaller and smaller to the middle, smaller and smaller to the middle. Now you may notice that the histogram give you the signal slightly earlier than the crossing line. Before it cross, this one slower. So it give you the early sign. It provide an earlier sign versus moving average crossover. So you can buy earlier at a lower price before it go down. You sell already. Before you go it go up, you already buy. Before it already go down, you sell already. So you're able to buy earlier at a lower price. But however, there's a risk. You may have a higher capital stock. It's good for people have a lot of capital. and able to sell faster at a higher price before avoiding the this crusher. So these are people selling, but you already sell at a higher price already. You sell here instead of selling here. Okay, because you must know that it's earlier sign, but the histogram actually are less confirmed. We call it a weaker signal. But I tend to love this. I like to use the histogram rather than this crossover lah. So the third one is divergent. Moving averaging, that's a convergent divergent. This is divergent. Divergent mentioned is MA crossover, moving separate direction from the share price. Now this is a bit difficult to see. I just mentioned that we are not going to using this. The decision is based on MACD, not follow the stock price. That means that the price tend to be follow the MACD trend. So when you see the price moving up, higher, high one, high two, but we notice that the crossing line and both together is flat. It shows that actually the price is going to move now. When the price is here is up, you see they use this type of method. Then this down, I mean the price is moving down later. So it's not easy to spot. And now I mentioned here because there's a D in MACD. I just know why divergent, just for the academic purpose. So we don't really use this in order. So we just use first the fast line cross over the slow line, MACD crossing, MA crossing. Second is the histogram the convergent to the central line. These two will do. Okay. So we move to the, maybe show you. So same, we go to this FX, then we press MACD. Okay, there are some other thing, but just go for MACD. Click already, you have. Trading view will allow you to bring 3 or 4 tools. So at more than you have to close that one. But now you don't need to see this anymore. You assume that it's above 20, we're going to use MACD. Okay, so close this thing. So you'll notice that this is because the unpaid. So you notice that the trend going up, then there's a cross here. So we look at this, for example, from during the March time. So actually the faster lane, the blue one cross over the red one. So there's time show that the price is going up. So until here, they might be going down a bit. Then after the up and down. Here the fast cross over the slow one is going down. Okay. Same to here. So you see the just now mentioned the divergence is not easy to see where the flat here go down, meaning the price is going down. It might be later on here. So we don't use that one. So just look into the cross line. Second is the histogram. Histograms, we see this line, you see going up here. Okay. Histogram here is, you see, the mean that you buy here is, you can buy a cheaper price compared to you buy at the 26 March. You buy at this 19 March will be better than 27 March like that. 27 March. So using histogram, again here, when you see this thing, then we start to sell this and this here already, rather than until here a bit too late. So something like this. Okay. So histogram and this thing. Okay. All right. Similar, you can try on KLSE. Okay. Now we move on the relative strength index RSI. RSI basically, it don't really tell you the strength. It's not like MACD is telling you that there are some reverse of trend. Okay, but the RSI basically is telling you that if a stock is overbought or oversold, that means that they are stock on the market. So they are showing you that a lot of people are buying, a lot of people are selling. Okay, now basically there are two lines. We hear there's two benchmark here, one is 70 and 30. I don't know what's the measurement, but for RSI 70 and 30. Anything that you plot the chart of RSI when it's above 70, that means the stock is overbought. A lot of people buying. So buy until no stock to buy already, they have to sell. If below, oversold. A lot of people selling until there's a time to buy back. So basically, they're basing overbought and overshot. Remember, you put BS, you say bullshit, then you remember BS. On top is overbought, below is oversold. Okay, so you can see that these two lines, when you plot data on, there are two lines, one is 70 and 30, your default will come out. And we see that when this RSI come to here, then it will be this oversold, about going up. It might be going up, okay? Then like that, okay? When it come to the top, that means it's overbought, okay? Coming out there. Second is divergence. Again, remember divergence is moving away. Now divergence happens when in the center line between 70 and 30, there's one line of 50. When the RSI hit cross 50, it show a more confirm on this stock could be moving up more or moving down more. So we can see here in this table, price going up, I think this area in the center, price going up, and this cross to the 50 going up direction. I mean, it's time to buy. It's very confirmed line to going up already. So when here, price is going down and you also go down and cross 50, also mean that it's sure it's going down. So better sell earlier. So there's two signs. So this cross 50 I use more often compared to just overbought also. I think cross 50 is more solid signal, strong signal. Okay, so I only two. One is 70, 30, one is cross 50. Okay. We go to FX, RSI, we come out this RSI, Relative Strength Index. Okay, and move on. So you can see that is at this moment is overbought. Doesn't mean the trend is going away, but just that people keep buying. But if the stock are so popular, I can see this tech stock. People still buying, still want to buy at a higher price. They don't want to sell, so they notice that it keep going up. That's why when the stock is a hot stock, like this tech and glove, the RSI give you a very slow, too late already. They didn't give you an actual signal that we need to use Fibonacci and EMA. This is an example. So as you see, all also okay, and you can see 50 line. They don't draw for you 50 line, but you can see the didn't cross any time to 50. Only here. Here, price go up, cross 50. This is a sure that it go up. Okay, this is RSI cross 50. To the last one, stochastic slow oscillator. It's the same growth as RSI. It's giving you also overbought or oversold. The line is it have a fast and slow setting, but I would like to use a slow because the slow stochastic is smoother. So you can see not so much crossing, you're panic. Being time to manage. So here at least not much crossing that much. Okay. So the setting we need to change. More default are all out because more default are for the stochastic fast. So we need to change to 533. Later on I show you change the default. But basically the difference is not just about 80 and 20 to show overbought and oversold, but it must have a cross also. So it show a very more certain signal compared to RSI. So I use this to know if a stock is overbought also more than using RSI. Because I just one line, but this got cross here. So it gives you a very certain. Like here, it's already over 80, but I haven't crossed yet. That's why I haven't go down yet. Only cross up to here. So it gives you a more concrete prediction compared to RSI alone. So again, go up, cross, in the fast one, go up to K, go up to both are slow. K, go up to D1, then time to sell. Here is going to buy. It gives you a more concrete prediction. Okay, right, we go to, okay, the other stochastic slope is divergent again. This also we mentioned. Divergent is moving separate direction as share price. It's the same as MACD, they're moving different direction. When the price is going up, it's going down. It basically show you that price will be go down soon. So our decision is based on the stochastic direction and not follow the share price. Again, mentioned to you, it's not easy to spot. However, I mentioned here because it was the initial intention when it was created by the founder, Dr. George Lane. So as I mentioned, at least you know how chemically why it was invented for this purpose. Okay, now I log into this back to this now. Okay. All right. Okay. Now we try to do another one. So we put one stochastic. Okay. It still allow me 4, I think. So too many, so we don't. Okay, never mind. So you can see from here, there's a 1433. All these are setting. RSI 14 is just not the default. I mentioned, don't forget to mention. Then the MACD 12, 26, 9. Remember, I mentioned this default. And this we need to change to 533. KD change to 5. Change to 30. Okay. Okay. So it's smoother compared to just now so many cross. So you can see here, even the cross they give you the ball. Here we know that it's overbought lah. Here cross, but not daily go down, not counted. Here just is cross. This should have a ball here. Cross is going up. Okay, so this is the stochastic slope. Okay. For this KLSE stock, Singapore stock, and US, you can use trading view. But for Hong Kong stock, China stock listed in Hong Kong, using AA stock or AA website will be better. AA stock here. You can try this link. I'll show you how it look like. Okay, here is you have to put here is 0988 is this Alibaba lah. So Alibaba, and the name is Baba SW. Okay. So here it is better because it gives you more information compared to the trading view, because it's Hong Kong, it's designed for Hong Kong market. So there are more detail. You can use the chart here also, but we will discuss here more. You can try here chart. You can use the dynamic chart or technical analysis. This is basically all defaulted. Defaulted one, everything ready here already. Then you can try error. You can see the candlestick is different. Okay. Right. End of the second session, to summarize it, is that after you get the brief company fundamental analysis, want to go for the analysis, the first thing is to check their ADX. ADX, if the ADX is more than 20, confirm we use MACD or histogram to see the trend, any reversal of trend. It's around 20 like that, okay, you still can use ISI or both MACD. Less than that or even lower one, stochastic slow to be lower one, then you work better. However, for ADX more than 50 or 40, for 40, 50, hot, highly volatile stock like tech and glove, then I find that MACD, histogram, stochastic doesn't work that well, a bit slow. Then it's better for us to use Fibonacci retracement or exponential moving averaging in the next section. So assignment 2, I already sent to your email actually just now. I just copy this thing and paste to your original file and change the name of the file sent to you. You can decide to continue the company you choose, or you can also change the company. You find that the company after I comment you don't really like it, you want the other company, is fine. Just now before Mr. Kami, I'll mention to JC and Mr. is that for the starter, practice, it's best to look for those stock have the target price TP, target price set by those investment bank. These stocks are more popular compared to those stock that without the target price. Stock without target price normally are stock that the big banks and big investors they did invest. So they don't invest this stock, they don't fry it they don't chao it so they don't talk much, they don't analyze for you. So you have a hard time to analyze the stock yourself, and the few experts analyze it. People like Len Yan those like Yixiang, they are very good. They can find the gem stock, then it's fine. But for us, I think we stick to those already have the target price, already analyzed by bank like HB M Bank Public Bank. They don't analyze for you, so it's easier for us to look at it. And furthermore, normally when you have a target price, it provides you more tools to whatever I mentioned to you. I always to sell the second highest target price. It provides more tools for you to gauge your margin of safety. And normally popular stock also, they have high volume. They have more people invested, so the price tend to go up more. You have more chances to sell at a higher price and sell higher price, and also buy when it has a price correction. Wherever the stock go up, you also go down for a while for price correction. So you may have this chance to buy. For example, like the glove stock at this moment, like today is a good day, or tomorrow continue for people to add their position in this glove. So I think this is the end slide. First thing is that you see, first thing, if you go down here, you see, ask you to buy. Ask you to buy here. You go down to detail here. I click the more technical. Come out here. Ask you to buy. 2 ask you to buy, 18 indicator sold to 18 indicator sold to buy, 2 ask to sell, 8 is neutral. Then they are oscillator and moving averaging. Then if you say, oh, okay, I want to change this 1 day, what about 4 hours? Somebody use 4 hour one. Strong buy. 1 hour, buy. Then 5 minutes, or strong buy. One. So it's too flexible. You don't know which one to see. So confusing. So we try to avoid this one. Okay. So this stock we get ready. We go for the full feature chart. We go for ADX. ADX. Okay. So confusing. We don't want to see so many things. We only want to see the ADX and 20. So you can see that moving up there is also quite volatile. I don't know what company it is, quite volatile, high. Okay. So next we go for MACD. Okay. MACD, you see now we don't see the past already. Look at here, it's crossing here. Supposed to come down, it's already back up again. Yeah, because it's very high volatile. I show you the it's quite high volatile. It make it not that a bit too late. You come here, ask you to sell already, suddenly ask you to buy. Yeah. You see, all this too long, you know, buy or sell because it's too high volatility. This stock, this one we call it next section we have mentioned. This is called higher high and higher low. The low is all higher than the previous. The current low is always higher than the previous low. The current high is always higher than the previous high. We call it higher high and higher low. This type of stock is high trend. Okay. Now, okay, we look for the RSI.
You bullish,
bullish. RSI. We go for RSI. RSI is overbuy. People buying, but no many want to sell. Always on the top there. Okay. 51, you cross 51 is only here. That's about April time. After people wake up from March disaster already, or they realize that this is a stock. This is the time that more always is here. Once it pass through this ADX of 20, thing all go haywire here already. So from this case, for this stock, MACD may not be a good sign. I may too late to tell you here. Okay. All right, then we move on to stochastic. Okay, you take more indicator, they ask you to pay money. Okay, so we need to close this one. We don't want to see this one. So you go for stochastic. We change the setting. Change to 5. Okay. Okay. Here, basically here, you see, it's crossed, but actually it's not on the top yet. Here crossing. It's supposed to come down. Because it's high, it's more than 20 lah. That's why these two not accurate. You have to see MACD lah. But it's more than 40, so you have to see Fibonacci. Okay, now we move to Fibonacci. I show you just to see what's the difference. What was this one? Fibonacci we'll talk about next week, but because this stock is suitable for Fibonacci, it's like this. How to set? We talk about that next section. Okay, in this sense, you can see that the first support line is 54.5 cents. So if the stock, we find that it's a bit difficult to go up, then we'll wait for it to come down to here when we buy. If there's a price correction. You can see that every time they go through this line, it's struggling, then come down, come to here, the support to pull it up again. Come here. If here you don't buy, you see it's going to come down to here. When come to here, you're very confident to buy because the probability for it to go down here is not that high. Go up is higher. If the price is here, that means up is this range. This is called margin. Go down is very short. Assume that this is a strong support. This is one. So that's why you buy here. When come to here, you go down the time, you don't buy yet because you want it to come to this support only buy. So this time only the best time to buy. Then come to here is a challenging. You have to make sure it go up only you buy. Because if you don't go, you end up like this, come down again. So we go up to quite a big range, then you're confident, oh, now this is a new support already. So it's time to wait for it to come up. From here now, it stop at here. So you don't buy at this point because it's near, it's the highest now. This morning, it woke up high, it come down again now. So tomorrow may not be go up again, it might be here or go up, but the thing is, there's a shadow here, you see. I mean, the higher is 0.685, then it come down, highest is 680, come out here. So now here, you can see that the margin go up is this short only. The margin go down is this long. You understand? You get what I mean? So the probability is going down. If it go up, you earn a bit. If it goes down, you lost a lot. So it's not the right time. You have to wait for it to break through here, or it really go down, also good news for you. We go down here only you buy. This is another, because this is a new support. So you wait for, if you go down, wait for 0.545, but you have to be very fast because of self-fulfilling prophecy. A lot of people wait for 0.545. So normally I put a bit high, 0.5 like that, to alert me before I take action. On top here also again. So this is about Fibonacci will work better. Then we can go to another one to support our Fibonacci is EMA. EMA will come to this 25, 50, 100, 200 later on for next session. But basically, you see 25, this green line is another support, and the blue 100, it provides another support. But sometimes Fibonacci didn't work as effective when you go to second line. But here, you see this is a support line, Instead of here, they show you this is a support line. So you have two benchmark, two tools to help you to gauge. Okay. So I think this is a very good support line EFA. From here, So this one at least, so that means, look at today, the Fibonacci asks you to wait until 0.545. The EMA 25 asks you until 0.585. You see this thing come to here, automatically stop already. So whether you need to wait for 0.585 or 0.545, it very much depends on your FA or fundamental analysis about this stock. Whether tomorrow result come will be better or whatever, you know better, but of course you don't want to wait too long. So very much depend on how much you understand the fundamental result. There's two options for you to choose here.